So what in the world are ETFs? What does that even stand for? It stands for Exchange Traded Fund. Let's take a deeper look at what an ETF is, and then I'm going to share with you 5 of my favorite ETFs and where I hold them. Welcome to the channel. My name is Paris Clough, and I absolutely love helping people manage, protect, and grow their money. I would really appreciate it if you'd hit the like and subscribe button so that it would help the channel grow. All right, so let's jump right into what is an ETF. Well, I'd like to jump over to Seeking Alpha to get an official definition. Exchange Traded Funds, ETFs, explained. An ETF, or Exchange Traded Fund, is an investment security that combines some of the attributes of stocks and mutual funds. Like stocks, ETFs trade intra-day on an exchange, which means that they trade more quickly. If you buy or sell an ETF, it gets bought or sold that same day. Like with mutual funds, many ETFs seek to track the performance of a benchmark index, such as the S&P 500. So an ETF acts like a regular stock in its ability to trade quickly, but it's diversified like a fund. So it has the best of both worlds. That's one of the reasons why I like ETFs. Not to mention that they're usually very inexpensive. I'm going to leave a link to this particular article in the description below. I'd actually love to hear what ETFs you're invested in or what ETFs you're looking to be invested in. Put it down in the comments below and let's have a conversation about what ETFs you're invested in, and let's see if we can learn together the best way to invest in ETFs. All right, now let me share with you my M1 Finance account. M1 Finance is the exchange that I use for all of my ETF investing. If I look at an ETF, see an ETF, hear about an ETF, do research on an ETF, I'm almost invariably going to be buying it in my M1 Finance account. I absolutely love the M1 Finance platform, and if you use the link in the description below and you invest your first $100 with M1 Finance, you'll get an additional $50 for opening an account and funding it with $100. Now you fund it with $100, they'll give you $50. That's a 50% return on your money. I highly recommend, if you haven't opened up an M1 Finance account, that you do that right away, because I don't know how long they're going to offer $50 for your $100 investment. So take advantage of it while you can. The neat thing about M1 Finance is that it's really simple and really easy to use. In this particular portfolio, what you do is you create a pie, and this pie right here is called My Portfolio. A couple things really quickly here. You can see my balance. My gain is not so hot right now. As you know, the market, as of the recording of this video, we're February 23rd, and the market's not doing that great. And it hasn't been doing very well for the last couple of days either. So I'm down 18%, which is not the best thing, but the good news is that as I invest new money, I'll be dollar cost averaging in at lower prices, so I'll be taking advantage of being able to buy more shares and buy more fractions of the different stocks that I am invested in this particular portfolio. So what's really neat is that as I invest money into this particular portfolio, or pie as M1 Finance likes to call it, what it will do is it'll split my money up amongst all these slices of the pie, and it will do so at the percentages that I have indicated. So if I put $100 in, $23 will go into the REIT ETF slice. Within the REIT ETF slice, I have several different REIT ETFs. So REITs are real estate investment trusts. So it's basically an ETF that's invested in stocks that are invested in real estate. But then once that $23 comes into this particular slice, it now comes into these slices and splits it up based on these percentages that I have listed over here. So REZ, R-E-Z, will get 11% of that $23. So it breaks it down so that each one of my slices is building up at the same rate, or as a percentage. They're all being diversified and it's all kind of building up in a balanced way. So looking back here at my overall portfolio, I have a slice here for dividend ETFs. So these are ETFs that are really performing well in the dividend world. They're bringing in a really nice, strong dividend, quarterly, monthly, whatever it is. Then I have an index slice, which is all my index ETFs. Any ETF that follows an index, S&P 500, large cap, mid cap, small cap, NASDAQ, you name it. I have an ETF in there that follows the indexes. These two slices right here are my stocks, individual growth stocks that I kind of really like and want to be a part of. And then lastly, I have an ARK ETF slice. Now, ARK ETF slice, as you can see, is really not performing very well right now. I have 10% of my whole portfolio going into that, and I hope that it picks up. Kathy Woods did a really great job. She had a really great run for quite a while, and then over the last little while, it's not been performing very well. As you can see, it's down 57%. That's not something you want to have in your portfolio, but again, the good news is that as it's down, as I put money into this, I'm able to buy more shares. And hopefully when the price turns around and things go up, you'll have more shares at a higher price and it'll end up working out in your favor. So now that you know a little bit about how the M1 Finance app works, what I want to share with you is 5 of my favorite ETFs. Now these aren't all of my favorite ETFs, but these are 5 that I picked today to share with you. And the first one I want to share with you is ticker symbol SPYD. SPYD is a dividend ETF, and one of the reasons why I like it is because it has a great growth performance here. As you can see, the 1 year is 14.65, the 5 year is 18.6, Now, the reason why I like to look at the longer term is because any stock or ETF or fund can do well in the short term, but what are they doing long term? What are their real returns over time? The other thing that's really nice about this particular ETF is that it has a dividend frequency of quarterly, and the dividend yield is 3.63. That's a really nice yield, and the expense ratio is 0.07. That's a really nice expense ratio. That means that the fund managers are not charging you very much in order to have your money in this particular ETF, which is fantastic. The other one I want to show you is DIVO, ticker symbol DIVO. This is also a dividend ETF. Now, a lot of times you might think that a dividend ETF is only for the dividends, that you're not going to get any good growth out of it. Well, this particular ETF is going to show you right now that that's not necessarily the case. As you can see, the 5-year growth is 37%. The 1-year growth is 8.5%. And so not only are you going to get good growth in this particular ETF, but you'll also get a fantastic dividend. As you can see right here, the dividend yield is 5%, over 5%. That's a fantastic dividend yield. It's a great price right now, and it also has a great potential for growth. All right, now this one is one of those REITs, or real estate investment trusts, that I was telling you about earlier. This one is ticker symbol VNQ, or Vanguard Real Estate ETF. As you can see, the 1-year return is 13.36, the 5-year return is 20%. So it does really well, and it's been doing really well. It has a nice track record, which is what you want to look for. And then down here, you can actually see it does also have a dividend. So it's almost 3%, which is a really nice dividend for a real estate investment trust. Now, what real estate investment trusts will do is sometimes they'll invest in properties that buy and flip. Sometimes they'll invest in properties that buy and fix up and then sell. Sometimes they're buy and hold properties, and the rents that are coming in are what goes into the growth and what goes into the dividends. There's just a ton of different things that people can do in the real estate world to invest and to create an ETF to raise capital to be able to do some of the things that you can do in real estate. Real estate ETFs, as far as I'm concerned, are a great opportunity. Do your own due diligence, do your own research, make sure it's right for you. But if this particular ETF is right for you, you can see some of the results here. All right, let me share with you another dividend ETF. This is ticker symbol SCHD. And as you can see, the 1-year is 12%. The 5-year is 71% growth. That's a really fantastic growth rate. Not only that, but once again, you get a 2.93 yield, which is almost a 3% yield on the dividend. So you have a great potential for growth and great potential for yield. It's a win-win. Last but not least, ticker symbol VTI. As I shared with you, I have a slice of my pie at M1 Finance that goes into indexes, and this is a perfect example. This one is the Vanguard Total Stock Market. So this looks at all the stock market as a whole. It looks at all the large caps, mid caps, small caps, everything, and it gives you a return. So this last year was up 6%. The 5-year is up 77%. So the 10-year, this thing's been around for 10 years, is 200%. So the idea here is that you're going to buy this and you're going to hold it long term. These are the types of ETFs that if you really don't have the temperament to pick a stock and go in individual stock analysis, you just want to be able to put money into the market and have it grow. This is one of the premier choices for that kind of investing. And frankly, about 70% of money managers can't beat the index. So even if you want to go out there and kind of pick and choose and really analyze stocks, 70% chance you're not going to do better than just sticking your money in this thing. Highly recommend that VTI be a part of your portfolio. I'm not a registered rep, I'm not a financial advisor, but this is just what I do with my money. All right, so those are 5 of my favorite ETFs. I've got a lot of ETFs that I really like, but those are 5 that I wanted to share with you today. Quick reminder that if you haven't opened an M1 Finance account, make sure you click the link in the description below, fund it with $100, start getting invested in some of these ETFs. And what they'll do is they'll give you $50 for opening a brand new account with them. That's a 50% return on your money immediately. I also want to remind you that in the description below, I have links to several different resources, several different opportunities. Take a look down there, make sure that you avail yourself of anything that looks like it might be of help to you. And then make sure you click the link here if you missed my last video, subscribe to the channel, and click this one up here that YouTube thinks you might like. I hope you got a lot out of this video. I hope you have a great day, and I look forward to seeing you on the next one.